Hey, everybody. Welcome to the Wednesday weekly Market Insights webinar. I'm joined with Brad Ganane. My name is Nadine Vaughter, and Zach is out today, so we will be filling in for him. Sadly, he wasn't able to come in today, so we are going to do a little bit of some SONAR today. We're going to talk about the Houston market and kind of what's happening down there. Seems like there's something that's picking up, so we're going to kind of highlight that, kind of how you should react and all of that good stuff. Also, again, if you have any questions during the webinar, you can always send us a Q&A or through our Zoom invite. That way we can, see it, and we'll try to get to as many of them as possible. So I will go ahead and hand it on over to Brad. What are you seeing in the Houston market?
Nice. Thanks, Nadine. So we didn't have, with the freight futures launch last weekend, it had our team a little bit busy, so we didn't push any new data over the weekend. So apologies for that, but I'm sure we'll be right back at it this upcoming week and moving forward. So we have been seeing some activity in the Houston market, so we thought that would be a good thing to talk about here and to see what's going on and track what's going on as things progress here in Houston. And the first thing that we're going to look at is Houston's market share, which is currently at 3.1% of the nation's outbound volume, is currently originating in this Houston market, which, as you can see, year over year is with this green dotted line, is its highest market share that we've seen. So definitely something that caught our attention, especially when you look at its level here on 326. So about a week ago, or less than a week ago, where it was less than 2.75 in market share. So it's gained a significant +quarter%, and really just a short few days here, and using one of my fancy tools to draw a trend line and to see exactly what that value is. So over a 15% increase in its market share over 8 days. So definitely something that we want to track. And to put that in perspective, backing out, I want to use one of our custom tools here and create a tree map watch list to look at and see and reference, how the Houston market matches up nationally. So to do so, I'm just going to quickly build one of our tree map watch lists to get a little bit of a higher level overview. So to do so, I'm going to go into our market volume insights. I'm going to grab our outbound tender market share data set, and I'm going to actually add all of our 135 markets here under my display type, having the tree map listed. I'm going to go ahead and save that and pull this into a little bit of a bigger screen. Pull them side by side actually here for us to. Whoops, I want to get it side by side. Sorry about that. For us to view. So, and here we go. It's taking a second here for me. Sorry about that. There it is. So showing here, Houston here in the green, showing the day over day 3.6% increase in market share, but more importantly being, in the top, it looks like 3-4 markets essentially nationally. So as we see on our chart on the left-hand side, we're definitely pushing significant volume. If we look back for a little bit of a historical reference here into the beginning of April of last year, certainly seeing some seasonal shift as things start to kick up, and the summertime, or spring and summer being some of the busier times in Texas as a whole, but certainly in the Houston and Dallas markets. So, and I think the tree map just kind of paints that picture here on the right-hand side for you to see how it matches up with the rest of the country. But as I'm sure you've heard us say, and I'm sure you've heard us draw the correlation in the past, volume really is only one part of the equation, right? So we definitely want to see, with these volumes at a national level, things seem to be pretty evenly distributed from a capacity standpoint. There's not really too many things happening to cause much volatility when we see these volume surges. And to do so, we like to look at the tender rejection percentage to see how the market is reacting and what's the capacity's reaction to this increase in volume and gaining market share. So actually, I'm going to now switch to which very similar data set, how the market share is derived, and that's through our tender volume index, which is a very similar number and very similar directional movement, but this is actually the pure index value of the Houston market. And how the market share is created is this number divided by the current national freight volume number, which I believe is slightly under 10,000, which is the benchmark national load volume on March 1st of 2018. So with this number, seeing actually that with the pure volume index number, it's actually, we did see this time last year, June and July, peak a little bit above the level that our volumes are at right now in Houston. But if history repeats itself, it looks like we're definitely moving in a direction to potentially see higher volumes this year than we did this time last year. But nonetheless, it's more important probably to understand how the market's reacting to these changes. So to do so, I think definitely a way to view and to see how the capacity is reacting is through our dual axis chart function and looking at the tender rejection percentages. And to do so, we can certainly see that year over year, when we did see some very large volume increases in April and throughout May, June, and even through the end of July, or July 4th, excuse me, of last year, we certainly saw the rejections respond in that manner, and rejections rose from near 15% to upwards of 22% during that time frame, showing kind of the reaction of capacity in that Houston market. Now we're seeing a completely different case this time, or in this year, where I think we've certainly added a ton of capacity to the market. And to show a few things, we definitely have some outstanding data sets that you can view, some surrounding data sets, things like truck orders from ACT net truck orders that we have available. It's orders of our Class 8 vehicles. Here we go, and we can see the net volume of Class 8 truck orders, which throughout 17 and 18 certainly seen upwards of 45,000, 50,000 at some points in Class 8 truck orders. Certainly seeing that decrease now and kind of definitely reacting to the subdued activity in the market when it relates to capacity. Things like our employment levels as well are definitely some other surrounding data sets that I think need to be taken into account when looking at things like, in this example, Houston's volumes drastically increasing, and why are we not seeing market reaction to these increases. So I think these are some nice surrounding data sets, employment numbers, more hires, more trucks being added, more capacity. And certainly, when we look at the fact that our year-over-year volumes are very similar to what they were, so added capacity is certainly, and in some cases, some increased rates, but I think a lot of things are now being requoted here in 2019 to reflect the added capacity in the market.
Yes. So just to kind of reiterate what the rejections kind of let you know about, kind of, if you think of rejections, think of that as kind of the carrier and broker sentiment towards the market. So when you see the volume starting to increase, over a rapid, period of time, and you see the tender rejections not follow that, it's kind of going to let you know that there is still enough capacity in the marketplace to handle the amount of volume that is being shipped out of that Houston market. And so if you are a carrier trying to find the best places to get freight out of, Houston, of course, is going to have a lot of volume, but seeing those rejections continue to stay flat doesn't necessarily mean that you're going to be, able to get a high paying load, but you're definitely going to be able to utilize your assets. And of course, in the reverse, as a broker, and you see those tender rejections decreasing still, but the volume is increasing, then you should still feel comfortable to accept your contracts, and spot quote freight out of Houston might not be too much affecting you yet. Definitely a market to watch when you see that volume increase. You want to always watch the rejections to see if they increase. So that's just another way to kind of see how rates are going to shift as well, if you see that going up.
Yeah, definitely. And to that point as well, just looking at like to pull in some of our other major markets and see what they're doing as well, in accordance with our top 5 markets, if you will, that we saw on our market share tree map list. If I pull them here on all of them on the same chart, if I add Atlanta as well, and I think Dallas was in there as well, and zooming in a little bit to kind of see the directional movement here. So certainly since, let me zoom out a little bit actually and look at maybe a 6-month, but certainly with some of these other high volume lanes markets, with Ontario in the green, Atlanta in the purple, and LA in the orange, we're definitely seeing on their end, they've certainly grown throughout the beginning of the year, but they're somewhat subdued and kind of tailing off, if you will, into the beginning of the spring, with the exception of Ontario. And really, as you see the cause of Houston gaining so much market share, as you see this hockey stick movement upwards, and I think that's definitely why we want to keep an eye on it and look at it as we see sustained volumes in some of these other major markets, and capacity is pretty reasonably distributed across the country right now. Events like this or volume increases like this are certainly what kind of throw things out of whack when we've had a month or 2 months or even 3 months of kind of relaxed activity, if you will. So just to kind of put into perspective what Houston's doing in comparison to some of the other major markets. So definitely something we want to keep an eye on. And then also something I think that's really interesting is when you talk about large markets like Houston, Atlanta, even LA, Ontario, for example, I think it's really important and interesting to look at the nearest surrounding cities. So actually what I want to look at here is Dallas, since we're keeping an eye on Houston. And I think it's really interesting because when we see a lot of these volume surges in larger metropolitan areas or larger cities, typically a pretty popular move is that next nearest big city, if you will. So you can definitely see, if I zoom out even a little bit further and get a little more history on our inbound tender volume to Dallas, they're certainly highly correlated, and especially if we're kind of keeping an eye on what's happening over the last 2.5 months or so. Certainly a lot of that volume is heading into that Dallas market. A lot of capacity flooding that Dallas market. So something to certainly keep an eye on, as well as you see some of these markets gain volume and gain market share, to understand and have an idea as to where some of that volume's heading. So Dallas, good market to keep an eye on. Things like New Orleans, Louisiana, even Oklahoma City, and throughout some of your larger markets in Texas like Austin. Definitely keep an eye on and see how they're being affected with inbound volume as well and added capacity from some of the large cities near them. And also, I think an interesting data set to look at as well when you talk about Houston and being a port city and, you know, having Beaumont right there and a fair amount of local moves, if you will. I know something that we don't talk a ton about, but some of our length of haul tender rejection data sets and of course volume data sets as well to get more of an insight into exactly, you know, what is driving or what potentially are some of the moves that are higher volume or seem to be higher volume when we see these volume surges, and kind of in tune with most of the market in terms of the comparison of tender rejection percentage to volume right now being fairly subdued. But on less than 100-mile moves, we have seen a day-over-day change. I mean, nothing that I'd say is quite significant yet, but tender rejection percentage of less than 1% actually. So being that it only jumped 0.3% to 1.29 day over day, which was a one-day change. So in relation, excuse me, to what it was being less than 1%, it is a significant increase, I guess I'd say. But you know, nonetheless, if you're getting 99% of your freight accepted, nothing probably that's too concerning. But again, I think we typically see these rejection percentages kind of lag by whether it's a few days or week, some of these volume trends and volume changes. So I think it's definitely something that we want to keep an eye on, especially as we get into April here, definitely into early May, when we start to see other markets nearby like Atlanta and certainly Florida are going to pull a lot of capacity when their produce seasons start to hit. So I think it's definitely an interesting market to keep an eye on for the time being. And also from the Houston side of things, just quickly going into, I don't think we quite looked at the Hall Index as well, just to give quick insight into what the actual inbound, outbound freight flows are looking like and what it looks like in relation to its history. And I'm actually going to go under our display and make this a little bit more visually consuming through our baseline function, where if I draw, and again, for those who may be newer, our head haul index is, as we went through and we're looking at outbound volume and inbound volumes throughout the beginning part of this call. The head haul index is just the subtraction of loads essentially tendered to pick up in Houston and subtracting outbound loads minus inbound loads, excuse me. So as we see year over year, it looks like actually this time last year in April, we started to see a similar surge happening. Looks like a little bit later actually though, and then that volume kind of died off before it took a big increase there in mid-April, around April 19th, 20th, and we saw those inbound or outbound load flows really get much higher than the inbound capacity into that market. So not only to understand what the outbound volume is doing, what the outbound market share is doing, but really important to understand the availability or the assumed availability of capacity in those markets based on inbound delivery and freight. Whereas we can certainly assume that trucks can deadhead into markets from places like Dallas and Arkansas and Louisiana to make pickups in Houston. It's certainly more likely that within that 3-digit zip, trucks that are delivering into that market are going to be the most available or readily available, if you will, at the current contract rates. And again, to pull over and to look at the rejection percentage to again see some things that we saw this time last year, or in the coming months, I guess, was when we started to see some of the surge of tender rejections happen. So not saying that we'll 100% see it again this year, because of the added capacity in the market, as we can see through truck orders, through increased employment in the industry. So not saying necessarily that that will happen, but I think as you do monitor these volume numbers, if they remain high, if we do see rejections begin to creep up, I think it's certainly something that we're going to want to keep an eye on, and that you're going to want to be aware of. And again, from one other thing that I think we still have a little bit of time, that I kind of forgot to pull up, that I wanted to from a watch list standpoint, was just looking at the most affected lanes, if you will, out of this Houston market, to kind of cap off this little Houston analysis, if you will. And that would be, I'll probably just go with a standard watch list here, and one of our default symbols here, and looking at the Houston, Texas. Here we go. Houston, Texas outbound lanes. So just keeping an eye on these as well. I know I mentioned definitely a lot of these high volume out of Houston seems to be typically staying pretty close, going to places like Dallas, Oklahoma City, as we see McAllen, Texas up there, Houston and McAllen, which actually one of the lower rejected lanes. But just keeping an eye on how lane specific out of Houston, what the reaction is to accept or reject freight going in these directions. So would definitely recommend having one of these watch lists pulled up so you can see how loads going to different areas of the country are affected. And I think that's pretty much what we got for Houston so far. Oh, I was going to show one more thing on our chart as well, which I think is definitely interesting. I know we've talked about it before, but we haven't talked about it too much recently, and that's our FBX data, our FreightWaves Baltic Index, which is the spot rate. I'm going to change my display really quick. It's the spot rate for 40-foot container. I wouldn't say it's necessarily a one-to-one volume to price correlation, but certainly the ocean container or the cargo ships work in a very similar manner that our over-the-road capacity does. Added volume and finite capacity tends to increase rates, and I think that's something that you certainly see here with this FreightWaves Baltic Index from China to the North America East Coast, which is going to include 40-foot container rates to places like Houston, to places like Savannah, Georgia, to Virginia, New Jersey. So tracking the average spot rates, and certainly as you see from essentially July of last year, the increase spot price from roughly $2,700 per container to upwards of $3,700 per container. Certainly our market experts and analysts would contest, and I'm sure many other in the industry, that it's tightly correlated and related to, especially coming from China, some of the tariff talks. As you see that this number drop off, as a lot of the volume was pushed into the U.S., into places like Houston, Savannah, and we can certainly go through and see how a lot of those volumes have surged. But just kind of the reason I bring this up is we typically see roughly 4 to 6 or so week lag from these containers making it, in some cases even upwards of 2 months, making it over to the eastern seaboard in the Gulf of Mexico into those port cities. And then, once they get there, being offloaded, broken down, taken to DCs, and certainly another nice data set to keep an eye on if you're working in and out of, or trying to better understand different factors that may be contributing to increased volumes out of some of these port cities. And again, this is the FreightWaves Baltic Index, and it's the average spot rate for a 40-foot container, and this one is China to North America East. and we have a few different lanes going into the West Coast from China to the Mediterranean. And then we have some Europe lanes back and forth. So definitely another outside data set to keep an eye on, and that can certainly be highly correlated with some of our volumes in port cities. So I think we're pushing up on time. I guess I'd say, oh, and we're definitely open for questions. I think we may have one here that so far that we may grab. But as we kind of get towards the end, in conclusion, we're gonna continue to monitor the Houston market and see what happens, see if there's any volatile changes that occur due to the increase in volume. Definitely hope you guys enjoyed the quick analysis, and hopefully I articulated half as good as Zach can and does. Definitely miss him when he's not here. But hopefully you learned a few different ways that you can further use Sonar for those of you that are using it, and for those of you who are just on here checking it out for the first time. Definitely encourage you to reach out to us, have a conversation, see what you guys are interested in seeing, where you operate, and how the Sonar data could potentially help you by understanding how freight flows are moving and how capacity is reacting to them on a daily basis. I don't know if, TP19, of course, Transparency 19, May 6th, we're having free Sonar training there. So for those of you that are attending, please reach out to us. We'll get you signed up. For those of you that are interested in attending, the same, please reach out to us and we'll get you set up. You can reach us at freightwaves.com/sonar and contact us there. And I think we'll go on mute here for a second. We're going to grab a couple questions. Be right back. For those of you that have any further questions, please don't hesitate to ask them. Okay, so we do have a question here related to outbound tender volume and outbound tender rejections by location, asking if we have a way to, or if we have a sortable report by highest to lowest, being, it looks like sorting highest rejection and lowest rejection, and highest volume and lowest volume for both data sets by individual geography. And we do have, so we have our watch list that could certainly, you can customize, and we can create the watch list to certainly show what you're looking for, I believe. Also, all of the data is downloadable through our API connection. So if you have, I guess, the means to do that analysis on yourself, you can certainly download the data. We can certainly assist in that. We have roughly 20 data scientists on staff, several financial modeling and pricing analysts on staff that have experience in doing so. So that's definitely something that we could assist in. But yeah, hopefully that answers your question. We do have or maybe we don't have your contact info. So if you want to leave your contact info via the Q&A, we could reach out to have a further discussion offline. But hopefully that addresses it. So
we'll just stay on here for a couple more minutes, see if anybody else has any questions. And if not, well, then we'll talk to y'all next week. All right. Well, thank you everybody for your time today. We're going to go ahead and sign off. If we didn't get to your question, we'll reach out to you separately. And again, you guys can always reach out to us on freightwaves.com/sonar. Thank you guys. Have a good day.